Seema, good to see you again. Is there any way to really gauge the risk for the economy and the markets right now? I mean, what are you guys using to try to gauge any sort of measure of what may happen in the next 12 months?
Hi, Brian. Yeah, that's become an increasingly difficult question for, I think, analysts around the world. That the traditional economic data that we would typically look at, it's very difficult to follow. You know, if you see numbers, payrolls, for example, last month surprising as much as they did, PMIs falling down to lows of 13, kind of unseen numbers like this, it's quite difficult to fathom how big the swings are. So typically, you know, people are looking more and more at high frequency indicators. The thing that we'll be following closest at the moment is going to be confidence, because what we need to see is this resurgence in cases in various parts of the world, including the US. We want to make sure that it's not starting to weigh on consumer behavior, because if it is, then that really puts the recovery back into question, which is exactly what Powell was saying yesterday.
Yeah, I mean, you ask 10 people, you're probably going to get 10 different answers on what they think is going to happen from a health perspective. And as we have said for 4 months, health data is the new economic data. So with that as our backdrop, Seema, what do we do?
Right, it's a very difficult question. So, I mean, from our perspective, we think that maybe markets slightly exaggerated their response to the improvement in economic data recently. I think a lot of the improvement that we have seen has been really due to pent-up demand being released. Now, at some point, that's going to be satiated, so we need something more. From our perspective, you know, as we see these resurgence in cases, there is a real risk that consumer behavior is going to be derailed again. So from that perspective, we still believe in being quite defensively positioned. You know, we still like technology. I know it's very expensive, but these are the companies that have large balance sheets, positive cash flow, and they have a very strong story in this kind of lockdown era. So we still like that, and we generally like being up in quality. So wherever you're looking, you need to make sure that those companies have got a really, really strong backdrop, that they can withstand a lot of the challenges that they may be facing over the coming months.
Is it worth it taking a flyer, maybe adding some risk to some of these beaten up emerging I mean, some markets have done great, but others, you know, they still look tempting to, I guess, some risk takers. Do they look tempting to you?
I think we would still be quite wary. You know, again, as you said, some emerging markets have done pretty well. And, you know, you just have to look at places like China, Singapore, South Korea, and you can feel some level of confidence there. If you're thinking about Latin America, we still have doubts about how well they're going to manage this pandemic. On top of that, they're still struggling sometimes with their policy stimulus. So we would maybe be a bit more wary about those. Whereas on the other hand, you know, Europe, which has been traditionally the beaten up region around the world, we actually are looking at it a little bit more positively than before, because they seem like they've managed the pandemic a little bit better.